All right, well, we're going to stay on the markets and bring in our next guest, Troy Vincent from DTN. He is a senior market analyst there. Troy, thank you so much for coming in today. We really appreciate your time during a holiday week.
Thanks for having
And
me.
I want to sort of start off by asking you, as things do start to normalize a little bit more next year, I want you to give us your perspective of what happens in the energy sector, particularly with crude oil prices. Where did they go? And then also natural gas, which has seen so much volatility, particularly in recent months.
Yeah, so the outlook throughout 2022, right now is still kind of highly debated, just like everything else going on in the economy in respect to a lot of uncertainty around COVID developments, government responses to COVID, and really just the industry in general, given that there's been a lot of shareholder, demands that have changed over the past couple of years amid COVID and the crash in oil demand back in 2020. So looking out over the coming year, that kind of diversity of opinion that I was speaking of is if you look at the major institutions, particularly governmental institutions and institutions like OPEC, they're seeing builds throughout 2022 in inventories, which should keep a lid on oil prices. On the other hand, there's a lot of uncertainty around within OPEC around how quickly OPEC producers can bring supply back to market. And that's seen in monthly OPEC reports. I think there's a lot of people watching the fact that there are a number of countries like Angola, for example, that are not able to boost production as quickly as OPEC has been allowing them to do so. And very similar things are potentially playing out in Russia, where it doesn't look like they'll be able to meet their targeted production levels that they're allowed to increase production to by the spring either. So that, there's a lot of uncertainty at the moment. Personally, here at DTN, our view is that we're likely to be somewhere in the middle, where we expect strong non-OPEC growth, as well as some OPEC growth and some laggards from the OPEC group that will ultimately keep us somewhere around that kind of $80 a barrel level in Brent, and help keep some, keep us from reaching that $100 a barrel level, unless there are some more severe supply disruptions, because we have seen, for example, a number of supply disruptions, whether it be Nigeria or Libya here in recent weeks. And those are all things that make the spare capacity, left around by OPEC and OPEC plus spare producers more and more important as the year progresses.
And how are you seeing the energy sector right now? One of the best performing sectors of the year, I'm looking at the Wi-Fi Interactive, and we're looking at gains of 47.5% for XLE that tracks the S&P 500 energy sector. Let's take a look at the month to date as well, looking at gains of roughly 2.4%. So that's actually a laggard. It's the second worst performing sector of the month so far. How do you see energy performing in the new year?
Yeah, I mean, we're talking about XLE and these ETFs and stocks in general that are heavily oil weighted. It's ultimately going to come down to to those scenarios that I just laid out. Can we break up to the above the $80 level and move into the $100 triple digits as we move into the summer next year? That's the big debate, and I think that ultimately that will determine the trajectory of these stocks. However, at the same time, I think it's important to consider that the growth that we've seen in demand, for example, one of the key areas that I've been researching in recent months is the impact on oil demand and diesel demand in particular of e-commerce sales, of the record strength and just retail sales and global trade in general. And we expected that to diminish as we move through and into 2022. So, you're talking about world trade levels that grew something around 10% year on year in 2021. Should decelerate to something around 4% in 2022 year on year. And that also entails, slower demand growth for things like diesel and ultimately crude oil as that kind of macro development plays out. So I think it's the stocks are going to ultimately reflect the underlying commodity price. But I think the underlying commodity price is, both a factor of the supply side increasingly from OPEC and what the U.S. does in the coming year, because there's a lot of speculation around, will the U.S. producers continue to be restrained as they've been over the past year and a half? or will they continue, or will they begin to really boost production? And in my perspective, there's at least a 6 to 8 month lag time between rig counts really starting to pick up and production starting to follow higher. So I think that at the very least, you've got a period here in the first half to 8 months of 2022 that could provide further upside on the equity side as well.
And then as fiscal policy and central banks begin to tighten, what do you think then happens to global growth and merchandise as well?
Yeah, so I think that's just kind of another straw on the camel's back, right? So we've got the fact that the fiscal impulse is going to be slowing. Something that's really important to consider, I think, is that from that kind of March 2020 through March 2021 period, we had a fiscal stimulus here in the U.S. alone that accounted to something like 26% of U.S. GDP in 2019. And that just dwarfs the fiscal stimulus that was, seen back in the 2008 period, which was closer to something just like 4 or 5% of GDP. And so my point is that ultimately, as we move into 2022, we've got the fiscal impulse slowing markedly. We've got global central banks and the Fed, working towards tightening monetary policy. All of these factors should contribute to slower demand growth. And then on the other hand, if you look to Asia, places like China are still, they're still kind of carrying on this no COVID policy crackdowns, as you were just speaking about prior to my segment here, talking about cities of 13, 14 million people being locked down. It doesn't appear as though in China that's going to change anytime soon. We've got the Olympics coming up in February, and there's going to continue to be a lot of political pressure there. So, as we move through 2022, the macro scenario seems to suggest that demand growth is likely to be slower than what we've seen this year, which I think is going to be a headwind for oil prices, and alongside that, a stronger U.S. dollar, which also, of course, typically presents headwinds for commodities and oil as well.
All right, a lot to consider there. Thank you for that insight, Troy Vincent, DTN Senior Market Analyst.